Hello everyone. All right, let me share this link out for the live stream. I'm going to share it in a few places. And Discord and Twitter. I hope you're all doing well today. I'll share it one more place. One of the first comments is someone says, nice short. Well, so I want to talk a little bit about that. Not so much that particular short, although we can. So we'll talk about where price is now and where our resistance is overhead. The major resistance overhead now is, from my perspective, sweeping this high. There's a nice liquidity idea there. The major resistance we broke out of, that we really only got about a 2.5% rejection from, it was this point of control with some minor fib confluence, and then we had some ascending channel ideas for confluence as well that aren't on my chart anymore. But, you know, so somebody said, nice short, which is sort of a tongue-in-cheek kind of comment. But let me give my perspective on the market and, you know, how I like to position myself in it. So I've been looking for swing longs down at the lows of the range and on these retracements. And the way I've been managing those positions is I'm not going to close my longs unless there's weakness. There's been no weakness. But there's certain levels on the chart that I look at almost as crossroads. And so for a bullish continuation, we need to claim this point of control. And from my perspective, the point of control is a very important level. If we break it, it becomes very likely that we move through this kind of dead space on the chart. And so when you look at taking something like a hedge short, for me, I like to hedge myself at crossroads, right? Because, you know, it's almost impossible to predict is that price is just going to go straight up without any pullbacks. And say I take a short off of this hedge, or a hedge short off of this swing failure, but then price just keeps going up. Well, there's no way for me to know that, but I can find some places on the chart to hedge my long perspective. And so my perspective is it's okay to have a bullish thesis or a bearish thesis, and you're looking for entries that make sense, and you're looking for opportunities to hedge those positions when it makes sense, right? Or hedge that thesis. You know, I could talk about some of I'll briefly do this because I think it helps address something. In the members Discord, I made a quick video about this, but I'll address it now, which is FOMO. And so, you know, back in, this is the 4-hour chart, back in the summer of 2022, we were in this kind of grinding up price action. And I'd taken some longs off of some of these retracements and longs from some of the lows. And one of my targets was 25K. And so that was a short that happened to work out very nicely, almost to the dollar. There was a lot of confluence here at this level. And so I took this short, and one of my long targets was down here. So then we had this really aggressive impulse of almost like 20%, right? And my long target was to sweep this low into the 886. There were some harmonic ideas at the time. So we had this 22% impulse, which actually ended up rejecting right into the golden pocket. But if you had missed that move, you might start thinking, wow, I've missed the entire bull run. And there were some really bullish ideas from here, obviously bearish ideas. And so what you're looking for in a situation like that, the ideal scenario would be to have longs from the lows, shorts from the highs, shorts from major retracements, just as hedges. And so what's the outcome of me hedging short? Well, I've taken some hedge shorts up from here. I think I'll just from memory, remember all of them. But if we want to look at the shorts I've taken, so if I have longs, well, then I'm trying to limit my exposure to where I'm not going to be capturing profit. I'm saying, hey, if we break out of this range, I would want to short from the highs of this range, but if we break out, I'd want to cut it and just let my longs continue. And so in a sense, I miss out on this chunk of profit from my longs, but I get the benefit of being hedged in that moment. So if we do reject, I'm not, I'm kind of capturing that profit between the spread of my longs and my shorts. And again, I didn't short this swing failure because when we broke out of this level, this was the last, and you can see we get reactions that I shorted here, and I cut that short when we broke out of those highs, and I let my longs continue. Actually, let me leave these on the chart really quick. And this is important to talk about because it's about understanding that you don't know what's going to happen in the market, and your expectations or belief that you know what's going to happen is going to get you in trouble, right? So I could say, oh, I'm just going to sit in longs. Even when I took some of these shorts, I said, hey, I'm not particularly bearish here. I actually wouldn't be surprised just to see an impulse and see us fill this entire move, but that doesn't mean I'm not going to hedge at resistance. And then hedging here at the point of control. But saying if we break out of the point of control, claim the point of control, I'm just cutting my shorts because it's likely we continue on. And I would prefer to be in a position where I go to sleep at night and I have a hedged position instead of just full long exposure, waking up to something like this, right? But anyways, so that being said, I like to look for longs at support and shorts at resistance. For me, there's no resistance between this major level and this high. And so the shorts I'd be interested in, where I'd like to hedge out my position, would be after we sweep these highs. And I would like to see price reject and come back below those highs as a sign of weakness. Now, does that mean I would close my longs? Somebody actually asked me that here, am I closing my longs or taking profits from my longs? And I said, no, I'm just going to hedge short. But for me to close my longs here, because I don't know what's going to happen, I need to see some weakness in this uptrend. I need to see a break in market structure. There's a difference between hedging or taking a position at what I consider the crossroads, some of these crossroads levels, and just completely getting out of my longs, because there's no bearish market structure here. There's no break in bullish market structure, rather. So I'd rather just let price come back and show some signs of weakness. I'm completely hedged out, so it doesn't matter. If you're hedging a position, you shouldn't hedge your position and close your long, right? Because now it's not a hedge anymore. Now you're just short. If you close your long and open a hedge, it's not a hedge. So anyways, my perspective has been bullish from this range. I've been looking for swing longs, and there's no way to anticipate this. Although, last night when we came to this level, I said, it's really important to temper your expectations. I just made some comments in the Discord, because no matter how important a level is, price can just do this. Any level can just be broken through, and you're just playing a game of probabilities with managed risk. So anyways, so let me just pull up a couple things. So my perspective here, let me turn off this volume, is that we will continue to push higher. Whether or not that happens, we'll see. But at this point, it is a guessing game. But why are the odds of pushing higher more likely than pulling back from somewhere in here? One is, as price is pushing up, like negative funding is just going up and up on most pairings and exchanges. So people are shorting this move up. And I think as long as people are not believing in this rally and just shorting it, the potential for a short squeeze is there. And then there's no resistance here. The last level of resistance for me was down at this point of control region. And after that, it's just sort of a smooth sailing, I guess. Same thing with here, right? As soon as we broke this level of resistance, there's really not a lot of structural resistance here. And this was a little more important because of some confluences. But as soon as we break it, price just moves up through it quickly. And that's what I said at the time is if we do break this level, price is likely just to move through this price action quickly. We had a similar thing on ETH as well, where the structural resistance is pretty minimal. Here, ETH is coming into the golden pocket, which is interesting, but there's not a lot of confluence there. Yeah, well, my only level of interest for a short, somebody's asking what would be my level of interest, would be to come up and sweep this liquidity above these highs. If we reject from somewhere in here, we start seeing signs of weakness, then yeah, there might be some opportunities for shorts with bearish absorption. But as of now, I'd be more prone to probably be looking for longs on a retest of the point of control than I would to be looking for shorts before we've tapped this level. Now, if we lose the point of control, that'd be interesting. But my perspective is always that price is driving towards liquidity, and you have clues about where that is. And so does it make sense that price would be driving in to take this high? Probably, likely at this point. And this doesn't really bother me, but I will address it. Somebody said WTF, blah, blah, blah. So this is just my perspective on price action in the market. You know, everyone's welcome to their own perspective. You know, it's interesting because in the in my time in the public space and on Twitter, we've had some pretty amazing trades. Like I kind of predicted a Gartley forming in this price action. So I shorted, longed, shorted, expecting this to be a major high at 48K. And I made a lot of content on that. And so when you do something like that, people say, wow, you're incredible, right? Or if you short the highs here, if you get this long. And in some ways, you know, if I was taking swing longs down here, people think that's amazing. But if you take, as soon as you take a losing position, people are like, boring, you dummy. But I'm saying my perspective that I have is the type of thing that allows me to find myself in great positions over and over again, and understanding that there's no way to interact with the market without taking losing positions. Losing positions are part of your plan, right? You're making decisions. Do I want to short here? Do I want to hedge my long bias? Certainly. Do I want to cut my shorts? Yes. Why? Because this important resistance is giving out. But one of the important things is to understand what important levels are. What levels matter? You know, it's likely we have a continuation if we break out of this point of control because that's an important level. We interact with it, we break out. So understanding this is a good place to look for hedges. But is here a good place to look for hedges? No, right? Because this is before important resistance. And let me just talk about the importance of point of controls because I'm going to be talking about them a little bit. A point of control is on a volume profile where the most traders have open positions. So it's where the most volume has been transacted. And so in this whole range, this is where the most longs and shorts have opened and where the most volume has been transacted. So this is where most traders had interest in the context of this entire range. We do have a high volume area around here. That's not quite the point of control, which is worth noting because price is interacting with it, but it's quite widely distributed. But that's why the point of control is so important. That's why I'm always looking at point of controls and ranges. Is because you can see where the big traders have interest. Those are where positions are being built. Someone said, damn, Bitcoin falling hard again. I don't know about that. It is interesting, though. We do kind of have like a secondary point of control right here. Second high volume area on the volume profile. Yeah, we have the $20,000 psychological level here. Personally, this is just my preference. I don't like trading psychological levels like 20K. Just checking the volume here. Yeah, so a couple people saying ignore them or whatever. And I will just say this. I don't mind criticism. I don't mind hard, questions. Why'd you short there? Whatever it is, right? I don't mind addressing some of that. But, some people have such a narrow perspective on trading and analysis. There's a lot of nuance to this game. So understanding that you're really just trying to put the balance of probabilities in your favor, and you're looking for an edge, right? And understanding that you're not going to have 100% accuracy. That even pursuing that is dangerous. I mean, there's ideas here, but I'm just, personally, I'm not just going to open a short here. Like you could say, well, we're retesting these lows. We're tapping that $20,000 level. There's some volume profile ideas here, but I'm not particularly convinced by any of these ideas. It's just we have such a big liquidity target now, so close. One of the really challenging shorts to wait for was this 25K level, because we had so many, the confluences here, 50% retracement. There was a bunch of fib extensions, a retest of this pivot low. I ended up getting that short from the exact high, but as we were driving up to it, and this is the 4-hour chart, saying I'm waiting for this level, and we front run it. I did take a long off of this golden pocket retracement. We front run it again. Here, I'm waiting. We front run it, and in hindsight, it looks easy, but these are pretty big rejections over the course of days and weeks. 7% rejections. Although we did have some range ideas here. I think that was a 786 retracement. I remember everything. We had that 786 retracement. But eventually we pushed up into the level. We tapped it and had this really clean rejection. It can be hard. It can be very hard to wait for high time frame levels. And there's nothing wrong with taking trades off of lower time frame ideas, like a retest of this high into the 786, something like that. But just to understand it's a lower time frame idea, so you have to trade it with that perspective. It's probably not going to be your swing position, waiting for the major levels to be tapped for the swings. And so that being said, could we develop a range here with some consolidation, with some local ideas? Certainly, and there might be local opportunities for shorts and longs, but understanding that certain positions are less likely to be swings and certain positions are less likely to be scalps, are more likely to be scalps. A couple things. So I'm just reading the chat here. Shorts piling in, it's just liquidity. Someone says, when does it make sense to use log scale versus regular at higher time frame? If a move is incredibly parabolic, you know, let's just hop over to something like SHIB. Is this in alphabetical order? I'll be quick here. Okay, so if we go to something like SHIB, this price action is very hard to analyze on auto or on a linear scale. But on log, you... Oh, wait, let me go to the 4-hour chart here. On log, you can start to make a little bit more sense of it. And when you're pulling log fibs, which in your settings, you want to go to fibs on log scale. And you can start to see some clean interactions with like log fibs, you know, from this impulse low down to the 382. 382 is typically a bullish retracement, or if it's a downtrend, it usually signifies that there's going to be a bullish or a strong continuation rather. So anyways, it would make more sense to pull your analysis on a really parabolic move on something like log scale for something like SHIB. Now on Bitcoin, my preference would just be to have on the really high time frame stuff, log ideas and linear. Somebody said that 25K short was what sold me on becoming an LATF member. Yeah, that was a really nice short. I mean, you know, there's sometimes where, yeah, I'll admit that I'm like, where it's just like you're on fire, like you nail every single level. And there's times where, I mean, I think the swing longs from this range are really nice. But yeah, anyways, it's like sometimes you win 20 trades in a row. Sometimes you scatter some losses in there. But ideally, you should be positioned. Like if I'm taking shorts that are getting stopped out here, ideally I'm positioned in swing longs. And at least I'm navigating the fact that, you know, I've been reiterating I'm not closing my swing longs, not closing my swing longs. I even took some scalp longs in here, and I closed some of them in profits. I said I'm closing 75% of my scalp long. I'm adding 25% to my swing position, but I'm not closing any of my swing position. There was a question I saw up here. Yeah, I will say that it is possible that we just squeeze through this level too. We do have, you know, I did a bullish Elliott wave count. Let me pull this up. So this was back towards this level. This definitely is not a leading diagonal, but this could be a wave two, like this corrective wave. This idea was right-ish. But there are some ideas here pushing up into this this level up here, this 1618. So there's a lot of confluence here. And I spent a little bit of time thinking about how this could all pan out. So a wave one, which now this would just have to be adjusted to wave one, wave two. A push up into this 1618 extension, which would be sweeping this high up into the 786. there's a lot of confluence here. And then if we have something like a 382 retracement from there. So anyways, I will be referencing this. Like if we blast through this level, this is the next important level. And from an Elliott wave perspective, looking at all these retracements and extensions, there's some really nice levels right above this high, which I think, you know, if that would catch a lot of people off guard, squeezing up to like 23,000, sweeping this high into the 1618 extension, 786. And I would be looking for a shallow retracement here in a wave 4 because we've had a deep retracement in a wave 2. And so I'd be a little bit more prone to take longs aggressively off of something like a 382 or a 0.5 retracement. Then looking for this impulse up into this major golden pocket that looks quite nice, sweeping these highs for a wave 5, and then looking for that A, B, C correction that could see us come back down to this point of control that we're breaking out of now. I always think retesting the liquidity at a point of control is really important. And all of these fibs that are on my chart now are hypothetical. It's if we make a high here, this would bring our golden pocket retracement to this level, which is at the point of control. So anyways, I won't go deep into this. These are just ideas I like to have for myself. Well, I share them, but you know, I don't expect everybody to understand them. And I just pull them up on my chart when they become relevant. And the reason I spent, you know, although that I understand that price action impulses and retraces, if I don't have a plan, you know, I can be caught off guard too. It's really important for me to spend time on the charts, preparing different ideas that I can open up on a folder when they become relevant. Okay, well, price is coming up into this territory. I have plans and analysis for those ideas, and it's just about being prepared. So there's some questions I'll just answer really quick. Someone says, so do you think it will top with the S&P or act independently? I have no idea. There's not really necessarily any reason for me to speculate there. Somebody said mine was the parallel channel video. I think they're referencing why they became an LATF member. So I have a video on parallel channels. It's actually unlisted. There's a link for it probably somewhere on Twitter. It's obviously in the members group. But it's a unique way I use parallel channels that is quite powerful. It's a pretty cool perspective on price action. Somebody said, how many monitors do I have? I have 2 primary monitors and a second computer, so I guess 3. But one of the reasons is that I'm, you know, I like when I'm streaming or I'm also updating, like I pretty much update everything I do in the Discord. So when you're updating Discord and in multiple places as you're analyzing something like order flow and then you have your exchange window open, you're taking positions, it's just, I can't be tabbing through a bunch of different screens. I have to be very responsive with how quickly I'm doing things. Okay, so somebody wants me to cover ETH. I'll take a look at ETH in a second. Someone says, I'm comfortable trading ranges and entering trades from marked out levels of interest, but if I miss a trade from a level, I find it hard to enter the continuation. Yeah, you know, entering a strong continuation is challenging, right? Because it's like, when are you ranging? When is a liquidity grab and when is it the start of a continuation? My preference is to build long positions and build short positions. So let's just say, like, let's create a hypothetical here on this range. My preference, and I did do this, is longing the retracements to the lows and then shorting the sweeps of the highs. And so you're taking profits in the middle. and you're building a position both ways, taking profits, locking in profits stops you typically to entry, and if you get another chance to open shorts. And so you're just positioning yourself on all of these moves, long and short, in the range, but not closing your entire position every time you test the range highs, ideally building a position, but just taking profits. So if you do have a breakout, then you have a swing long that you can carry higher. So that's my ideal scenario. Here was actually a short target, right? If you recall. So this is where I had long positions, a bullish thesis, but I started hedging out my shorts completely here. And we ended up getting a pullback. Obviously, this is the whole FTX thing, right? But yeah. So, anyways, that would be my perspective: is to be building longs on the range lows, looking for shorts at the range highs, letting price break either way, and cutting my shorts when price breaks and starts trending. So, if you've missed everything, I mean, really, what you need to do. And it's a bit of a challenge. I did some scalping content in the Discord. Is you need to start marking out, like you need to go, this is my preference anyways. Obviously you can take a long and just put a stop underneath the consolidation lows. But there's so many liquidity grabs that happen with Bitcoin. My preference would be to go down to a low time frame chart and mark out your structure. And say, okay, well, we have this liquidity idea of a range possibly forming. Look for sweeps of those lows and reclaims. That could offer a nice entry. Mark out your structure on low time frames. Like even this was a short with some bearish divergences into the 786. This could have been a nice, I think it was a nice scalp entry. I mean, we had like a 1.6% rejection, I think. No, 1.2. But here's a nice place to enter, or a sniper entry rather, and you can probably take the risk of your position quite quickly if we don't get a breakdown. But being aware that we had bullish absorption forming against this low here after this. So this could have been an opportunity with very tight invalidation. You have bullish absorption, you have a liquidity grab idea, a retest of this level, bullish absorption against this low, to enter into a long position with tight invalidation to try to catch a continuation. And then you might even take your short here and take your short, take your long, maybe take the risk of your short, or just let it run to stop loss, however you prefer to do it. But you also have a long position from this sweep on bullish absorption. And if you're really interested in finding a position, you certainly can just by applying liquidity ideas on low time frames. I think that's a good, Sol is a good instance of this, where I've been scalping. I did get stopped out of my shorts on Sol, but I've been scalping short and long in this range. And I'll do this very quickly. So I start to feel like I have no life when I remember everything's price action for the last year. But anyway, so here we had this initial rejection. But we actually had some really nice scalping ideas, and I made a video on this where we sweep the liquidity above this low. That could be a scalp long idea into the golden pocket. Now we come up and test the scalp short idea because you expect maybe a range to form here. Then you push up into the 786. Then you push up into the 886. And you have all these nice scalp short and scalp long ideas. Sweeping the liquidity under this low could be a scalp long idea. And then so I made some content on this. Here I said I am kind of anticipating a sweep of these highs because we're kind of grinding up towards the liquidity above this high. But there's certainly great scalp ideas here with 3-4% moves. And then I was interested in longs where we sweep these lows and reclaim them, right? So we sweep these lows, reclaim them. We got some retests here. This was another one, again, where I was interested now in sweeping this low and reclaiming it. Long setups off of here in this range, because this is like a 7 or 8% range. But now what I want to point out, I'm just going to delete all analysis off of here. And this is really important. I guess I think there's a lot of alpha in what I'm about to share. So you remember here on this low time frame on the 5-minute chart, these are 3 or 4% move. We hit golden pocket, 786, 886. Getting nice reactions. But now let's go to this range from this high, Well, we had long ideas of longing, and this was my long setup I shared at the time, was waiting for a reclaim of this low, this low, up into the golden pocket. And then we have another long idea here. But what we'll notice is price comes up into the golden pocket. We have a rejection. Then it comes up into the 786 perfectly again, just like this did. Golden pocket, 786, 886. And then into the 886. And these are nice scalp entries. I think this was an 8% rejection, 9.5%. Oh, I think it was 8% from my entry. But anyways, but there's long and short setups in here. And if you're looking to position yourself for either way price is breaking, you can let go of your bias and say, you know, there's probably swing short ideas here, there's scalp short ideas, but there's also long ideas for a continuation, for a scalp, 8-9% moves. And you just mark out price structure, you be patient, and you wait for entries. A sweep of the low, a reclaim, there's a long trigger, a sweep of the high, rejection, a short trigger, so on and so forth. So anyways, to answer your question about how do you get into a continuation, well, there's just a couple important things I would note is one, you don't know that there's going to be a continuation. So you can't necessarily say, I'm going to long anywhere here because there's going to be a bullish continuation on the trend. You don't know that. But so what I would do is I would go to low time frame price structure. I'd define my risk. I'd look for nice entries, liquidity grab ideas, take the long with risk management. But I'd probably expect some kind of range to form because that's typically what happens. So, you know, some range forms, you maybe look for hedge shorts, and so you can position yourself both ways. The same thing you do on a high time frame. That's what I think is the best to do on a low time frame. And one of the things that I'm trying to do with the LATF, and I think with some success, is to equip people with these tools, right? So whatever they're trading, the idea is that they're just going in and they're setting up their own analysis, their own trades, whatever altcoin they're trading, and they're looking for these ideas that repeat over and over again in the market. And they know how to find positions. Because what happens is there's so many people in so many different situations, right? There's people who had swing longs, they've closed them completely, or they didn't take any longs, or they stopped them out too early, and they're looking for some way to get in on a move, so everybody has different needs, right, or different goals, and I can't necessarily do analysis for everybody at every stage of price action to get them in a position that they're trying to get into. The best thing to do is to equip people with the tools to do that for themselves, right? And the most important thing in trading, just for anyone here that is new to trading, is risk management. No trading system will work or function without it. You need to manage your risk. You need technical clear and validation for your setups where your risk is predefined. A very common risk management standard is between 1% and 2% per trade. I'd recommend two things. If you're a brand new trader, going much lower than that, but probably just paper trading. There's no reason not to be paper trading as a new trader. You don't know what you're doing. You don't have an edge. You're just going to lose money. There's so many factors to trading profitably, and there's no reason to be putting serious capital at risk while you're learning. You should take some time to learn, paper trade, and then slowly scale up into meaningful positions when you start trading with real money. The market is not going anywhere, so you'll have lots of opportunities to make money in this market. If you don't ever take the time just to learn, and you're just trading and you're making emotionally driven decisions, you're just going to keep getting wrecked in the market. And you need to make a concerted effort to, if you're going to be trading, to learn how to trade. And it's not easy, and there's lots to learn, and you just need to do it one step at a time. Learn different concepts, learn about risk management, start applying those concepts with a paper trading account, and slowly progress. Oh, cool. Somebody's offering, saying, sorry for messaging you live instead of on Discord. The animation, oh, he must have sent a message earlier. Oh yeah, he's talking about doing an animation for me of my logo. Yeah, that'd be cool. I did have an artist working on a new logo, but they haven't been able to finish it. I think they had some personal stuff come up in life, so I did kind of want to do a new logo, but we won't go into that. I really appreciate that, and I'll get in touch with you. I'll just address this really quickly because I've addressed it many times, but obviously most people here haven't heard it. Somebody said, paper trading is great, but it removes emotions from the equation, which is probably the most important thing in trading. Yes, it does, but here's the thing. When you're new, you don't need the toll of emotions because you don't even have a system, right? So you don't have any idea what you're doing, and you're trying to establish a baseline for, okay, everything aside, all emotions removed, what is the outcome of my system? So you're doing some back testing, you're doing some forward testing, you're trading a system, and you're saying, okay, I have my trades clearly defined. I know what I'm looking for entries, for invalidation, for targets, and this is the outcome of trading that with paper money. Now you move to a live account and you see the results just vary wildly. Well, at least you have your baseline. You know what your goal is, right? And now you can start addressing some of the emotional triggers that stop you from executing your system flawlessly. But first you need to define what you're doing. Yeah. And I'd liken it to if you were wanting to become a heart surgeon, you go to medical school and they say, all right, well, you got to start with open heart surgery on a live patient. And you say, what? I don't even know what I'm doing. And they say, well, yeah, but you need the emotional stress of killing somebody. We are getting a nice little reaction here. You gotta learn, and you don't want to put yourself in those high stakes emotional situations until you're prepared for them. And brand new traders aren't. Someone says, can you look at Phantom? Can you look at ETH? You look at ETH. ETH is at the golden pocket. I mean, I hate to, I don't want to cause any FOMO here for shorts, but it is not uncommon it happens enough to make note of that ETH will be tapping a key fib and reject from it right as Bitcoin rejects, but Bitcoin's in la la land. But Bitcoin does reject or bounce, right? I've talked about that quite a bit. Something I look for is, ETH is perfectly tapping a level, whereas Bitcoin is just, who knows where. So we could see that. But so here's a situation where it's like, okay, well, do you FOMO into shorts now? Personally, I wouldn't. What I would probably wait for would be something like a range to start forming. Maybe we sweep this high into the golden pocket so we have a local swing failure. If there's bearish absorption in CVD, and that could be something that could elicit or trigger a nice scalp tight invalidation position. We could try to find a short. And it's really about, there is a reactive element to trading where as new information becomes available, as new price action forms, new structure forms. But here, if we even go to the 1 minute chart, I can already see some liquidity ideas and some potential price action ideas, which we could just look on the 1 minute chart here for fun. Well, we've swept these lows. By the way, I'm not saying that, I'm not encouraging anyone to take these trades. I'm just saying what, you know, probably is likely to happen here. And this is 1 minute analysis. We have two liquidity ideas for a range forming here. So we could sweep this low. We're seeing some nice volume coming in here, 7 million on a 1 minute candle. We have some horizontal resistance here, but what's probably likely? Well, maybe we push up and we start forming a range. We sweep the liquidity above this high. Maybe we come up and sweep it again. Something like this. And so as this potentially happens, I'm not saying it will, you start getting some low time frame setups with tight invalidation where you can start these as scalps, but leave some of them open in case of a swing position. And, you know, maybe we'll just watch how this price action progresses here. Okay, let's, yeah, so ETH, people are asking me to cover it. I'd just say we are at important resistance on ETH. You know, being aware of that is, what if there's an ascending structure here? Not quite. I like clean touches, but, you know, this would be quite a deep trigger for a swing failure of this high as a sign of weakness. But typically you find opportunities to get into positions in ranges. I'm pretty good at analyzing low time frame price action. The problem is about sharing low time frame ideas is they're very hard to execute. So I'm in the scalping live stream, members live stream I did not long ago. You know, what I mentioned is when you're scalping, you have to understand the time frame that you're trading on. Your invalidation is tight. You know, for longs, like your invalidation is here, and it's not here because here at the worst, because you're not going to get stopped out here. You don't care about getting stopped out. You're trying to trade as accurately as possible because your margin for error trading low time frame price action is very low. And so you need to trade very accurately. You need to take profits aggressively, remove risk aggressively, enter confidently without hesitation, because you can't, once you start getting imprecise with your entries when you're scalping, there's not a lot of margin for error before the whole thing starts falling apart. But I want to keep an eye on this because this is typical price action, right? I mean, this is so common to have the rejection, sweep the liquidity, push up, sweep this liquidity. So we'll see what happens. But, you know, you're essentially scalping like a 0.8% range here if you are scalping. And the only way, you know, there's a lot of people who are interested in scalping, and they're like, you know, I want to learn how to scalp. And they spend a lot of their time trying to scalp. But you really need a strong fundamental understanding of price action to say scalp like a 1 minute chart. And all the things that apply on the 1 minute chart appear and apply on high time frame charts. So I think that's the best time to learn and execute them. It needs to become second nature because you have seconds to oftentimes to enter your positions and to make decisions and to cut your positions when they go against you. So when you're having to make constant, accurate decisions over and over and over again in a short period of time, it's just more likely you're going to make errors. So I think scalping is not something that learning traders should learn how to do, or beginning traders should be learning how to do, unless you're paper trading. Then it's a great experience because you can analyze low time frame price action and all the concepts apply. Okay, so yeah, just a conversation going in about the animation. She says, I've been learning from him for probably about a year now and have talked to him about animating his logo a couple times as a token of appreciation, though I understand he got busy. I really appreciate that. And it's not just I got busy. It is, I want to change the logo completely. But I guess I have gotten busy because I haven't I haven't actually done that. And I really appreciate your offer. So Nate Grow is asking, have you ever developed a checklist for trading, like criteria that has to be met for every trade, or is that too rigid? No, absolutely you should have a criteria. You should have a well-defined system. You can have different types of systems. Some of you may or may not know. We're working on building the Lucky Apes trading floor. That's the group of mine. A paper trading platform that is built for learning and building systems. So there's actually a built-in checklist in your trading window where you check the confluences of your trade before you take them. And those get entered into a journal, and you can check the stats of all those trades taken with those confluences. The idea is to have a robust journaling tracking system where you can see the stats of all your trades. You can create the criteria for your trades based on whatever system you're trading, and you literally have a checklist in your trading window that you check, make sure there's a certain number of confluences, and yeah. So I do think it's important to have a checklist. And typically that comes in the form of confluences. Confluences is where you have several factors of, say, resistance. So, we could think about the confluences here. Let me just re-pull this on a lower time frame just so it's a little clearer. So we have this idea of sweeping these lows where we kind of pulled back and pivoted up. Now we have the idea of sweeping these highs into the golden pocket. There's two confluences, a liquidity idea, swing failure, a key fib. Let's see if we can't find any more. Interesting, we have a point of control here, but it's not really well defined. But keeping a volume profile pulled in a range is usually important. We have the value area high of the range. I mean, this is a very low time frame range. So this is the value area high right in here. Eyeballing it, it doesn't quite look like any channel ideas are going to work here. Actually they will. Let's just extend this left and right. Again, I'm just giving examples. This isn't advice for taking positions. But here we have quite a few confluences for a scalp short that I guess technically could turn into a swing short. Do we have order flow confluences? I'm just checking order flow really quickly. I mean, it depends. We don't have anything bearish absorption forming yet. That could certainly change. But here we can just count them. The value area high, the golden pocket, a swing failure, 1, 2, 3, and then descending channel idea 4. And this is a predictive channel. So this is what I've noticed in the market is that price on many time frames is often forming parallel price action. Or is moving between parallel lines. So that's significant because then you can predict oftentimes price forming a parallel channel because price is on the 1 minute time frame, the 5 minute time frame, the 10-hour time frame is typically moving through parallel lines. So it's always something to watch out for. Someone's asking if there's a particular reason I trade USDT instead of USD instead of USDT. I do trade both. I usually do my analysis on USD. There's way more volume. There's bigger traders here, and I believe the charts are more technical. So right now, I think there's value to be had just by watching the 1 minute chart. And we can just watch some of this price action progressing. Do we break out? Do we form a range? Someone's asking if there's order flow material coming on the LATF. The LATF is the Lucky Apes trading floor. You'll hear it referenced a few times in here because there's members here, there's public followers. There's some order flow material already done. There's introductions to order flow. There's a bit of advanced order flow content, and then obviously order flow updates. And I do intend to do more. Thank you, Clovery. He says, my charts look so clean. Sometimes they don't. I will address Gerard. I appreciate your joke there. You don't have to stop. And there's nothing wrong with being German, I would say. Yeah, my charts can look really messy after I've been doing some videos because I like penning in price action, and it can get a little wild. And I'll just say this, if you're watching this, I said, there's some ideas of coming down, sweeping this liquidity, pushing up into the golden pocket. And it's possible that I could, quote unquote, predict the next 5 pivots in this range on the 1 minute chart. But just understand that I don't know what's going to happen. And there's times where it can look like I know what will happen next, because it's like, well, how did I know this idea of a bounce from here and a rejection from here? If we get one, we'll see. But it's just, I've studied price action for so long and spent so many countless hours. These things repeat. So, you just recognize these ideas very quickly. And I don't know. It's just a probability thing. This could happen, but there's a high probability of this type of price action forming if we form a range. But this is like when I gave the example somebody asked earlier, is how do you get into positions if you're in a trend, if you've missed all your opportunities? I said, well, I'd come down to low time frame price action. I'd look for scalp entries with tight invalidation and try to get in that way. Amir says, not a member currently, but the best I've seen out there in terms of real alpha. Strongly recommended. I appreciate that. One of the things that I strive to do is you know, if you generate analysis or ideas that are impressive, that's fine. But I try to be clear. My goal is for things to make sense and not just be impressive and be unattainable. My goal is to teach things in a way that people can start applying them and understand them if they so choose. And for anyone that is interested in growing and learning to become a trader, you can become a member at the luckyapestradingfloor.com. The link should be in the description of this video. It's a great community, a great place to start your journey as a trader, or even if you're a more experienced trader, just to progress, be part of a great community. There's lots to learn. There's members I've been trading for 10 years who really get a lot of value out of it. And just for a context for what it is there's core educational material, and then I make a point to essentially do daily analysis with my perspective at different levels and the positions I'm taking, and explain why. And I'm applying the tools that are taught in the educational materials to my live analysis, because I think it's powerful to give live. They're not signals, they're just live examples of, hey, here are the factors I'm looking at, and here's where I would take a position and why, or what the trigger would be. Because I think, it's one thing to look at everything in hindsight, but there's something powerful about taking positions in the stress of a live market, right? And to apply analysis in the stress of a live market. Because one thing is when you're back testing or you're analyzing previous price action, which is very important. You should be doing that because you can gain so much experience by just analyzing the past, if you believe in technical analysis. But when you start trying to apply it to a live chart, all of a sudden these ideas start becoming super hard to see, and your biases really get in the way. And that's something that everyone's got to overcome. Just looking at the divergences here. It's relatively neutral. Maybe, no, this isn't even bullish absorption. There are a lot of shorts starting to come in. So just for example, here on this wick, so we had like a $7 million wick. There was a $3 million negative delta. So 3 million more shorts than longs. So it was a highly negative delta candle and tons of shorts opening here. So this is just like a liquidity idea where, I know this might sound counterintuitive to a lot of you, is all these shorts open at the lows and then get squeezed out. Longs open at the highs and then get wrecked. And, if you wanted to, here, let me go over to, so I'll just show that really quick. So you can see here at the lows of this candle, 3 million negative delta, all these shorts opening. Let me get rid of the net shorts and net longs for a second. This is a bid-ask profile. This is just showing you at different price points in this candle. So these are just candles. 1.6 million shorts, 1.4 million. We know there's shorts opening and not longs closing because we have an increase in open interest, a decrease in CVD, an increase in net shorts. And so what you'll see is price start reversing. Now these shorts are underwater, millions of dollars of shorts here, and they can just be squeezed out. And one of the things you would do, so we have our technical confluence, which we've gone over on the chart, the descending channel, the sweep of these highs. And we can also start looking at our open interest and our net shorts. And what we'd want to see is we'd want to see price move up and squeeze these shorts out, because we can assume even on a low time frame that that's the goal of the big traders, the market makers who are wrecking these shorts, is they want to squeeze them out. And so you'll start to see open interest decreasing as CBD increases, net shorts decreasing. It's the same thing. It's just a different way of looking at it. And you see these shorts get squeezed out, and then price will, and hopefully longs start opening, and then price start reversing again. And the cycle repeats and forms a range, wrecking people on both sides over and over again until price eventually breaks one way or the other. And that generates liquidity. It allows bigger traders to build positions. So one thing is, as price pushes up here above these highs, you'd want to see these shorts get squeezed out. And you know what would be interesting is, let's just go back to this. You know, the reason all this technical analysis works is these moves generate liquidity. People are shorting the breakdown. Maybe they're some of them are putting their stops above this high. Some of them are putting them above this high. Both of these are liquidity targets now, because people shorting a breakdown, many are probably just putting their stop above here. And so now price is targeting that liquidity. Market makers, big traders are pushing price up to grab those stop losses. But if we don't see a lot of those shorts closing, they're probably going to push them up to grab these stop losses. And so all you have to do is think about, well, if I shorted here, where would I put my stop loss? If I opened a $3 million short, well, at least above this high, at least above this, you see the reaction, you see the shorts opening, price move back above them, and now we start squeezing them out. And so, you know, we should see that volume start coming in as price squeezes them out. And then as soon as they're squeezed out, oftentimes you just see price reverse again and trap them again. So people get stopped out, and then price reverses, and they say, oh, I knew I shouldn't have closed my short. I knew price was going to reverse. Not understanding that price only came up to grab all that liquidity anyways. And so as price comes back down, they say, oh, I should have just left my short open. They open it again, and then price comes and squeezes them out again. Someone asked if I could show us could you show us how you set your out your fibs with the golden pocket so I can copy? Haha. It's just the fib tool. So if you pull a fib, you double click it or you right click it, you pull up settings, and you just enter in your fib values. So 0618, 065, you can change the colors to whatever you want them to be. And I have all my different values for extensions and retracements that I think are relevant. Well, yeah, a lot of it's based on Elliott wave ideas. Someone said, is there a way to copy your chart settings, or do you have them somewhere where we can copy? Yeah, well, I think I already just said that. I think all the tools I use, I've covered in all my educational content, like what my settings are, in the members Discord. So I don't know if I have. Some of it's probably in some of the public educational material. There is public educational material, by the way, which I highly recommend people go through. But yeah. Weekly and bearish divergences or not. So someone's asking about CBD divergences on the weekly or daily time frame. Yeah, they're important. The problem is, like, you should be using them as confluence at levels, but it's kind of like RSI, like those divergences can grow and get bigger and bigger and bigger. So you still want to be thinking about the liquidity and the technical levels in confluence with divergences like that. Ryan says, your content is awesome, clear, articulate, and packed with knowledge. Thank you. I appreciate that. Curious, do you hold long-term too? And if so, any tips or all trading? I look at everything as trading. Even swing positions or long-term holding should be done with, in my opinion, technical entries, invalidation, and yeah, to me, like a hodl investment type position is just a swing trade, and you should have a thesis of it. When is it not working? When is it working? You know, people, there's obviously a desire just to enter in to buy and not think about it, but denying the risk, it does not remove it. I actually saw a comment on Twitter yesterday that I just thought was so funny. Somebody said, I would never enter a long trade here. That's too risky, but it's a great place to buy spot and dollar cost average. Okay, whether you enter in a trade for $10,000 or you buy spot $10,000, there's no difference between the risk there. So are they just saying that they would just buy a smaller amount here? Well, then they're still trading. They're still trading long. They're just taking a small position. There's no actual definitive difference there between someone saying, I would never open a long trade here, but a great place to dollar cost average buy. Those are the exact same thing. And the only difference you could say is, well, I would dollar cost average with a smaller amount of money. Okay, well, then why not just take a trade with a smaller amount of money? You should have risk management. You should have invalidation no matter what you're doing, right? That's my opinion. So for me, longs from down here were opportunities for swing trades. And I was looking for swing trades, and I could end up holding these trades for weeks, months. We'll see how price action progresses. But that's not me just buying and holding. It's still me trading. It's just, I'm taking longs at support. I have invalidation, but I have high time frame bullish targets. I believe price action is fractal. I believe it behaves similarly or the same on every time frame, from the 1 minute to the 1 day to the 1 week. And yeah, so you just apply it. Whatever time frame you're trying to trade or take positions on is the time frame you should be analyzing your ideas. John Wick is asking me, where did you pull footprint chart from? I don't understand the question, actually. Sorry. If you could clarify. What do you mean, where did I pull it from? So again, we'll see how this reaction plays out. But say there was sort of a unexpected reaction here, and so I'm looking for shorts. Well, my preference would be even to be patient to the point where I don't want to open a short here. I understand ranges are forming. I'd rather open a short at resistance. So even if that's local resistance, this could be a trigger idea. We'll definitely be pushing out of this ascending structure, but also just taking an eye at looking at order flow and seeing how these shorts behave. We can go over to that for a quick second. We could look at the TPO chart as well quickly. Let's do a different tick size here. Let's do 20. Oop, not 100. So these are just market profiles. We haven't quite tapped these single prints. So here's another liquidity idea. So we come up and sweep these highs into the golden pocket, and then we have this row of single prints starting at $19,500. So to come back and tap these single prints as another idea before an impulse to the high could be interesting. So that's 19,510. You could pop over to 19,510. Or wait, I think I was looking at the 19,698 is where they start. I'll just enter in the coordinates. Definitely want to make sure you enter in the right numbers. So So there's just more confluence along these lows. So something like this could make a lot of sense on a low time frame. Sweep these highs, come back down, grab the liquidity under these lows, tap the single prints, and then maybe sweep these highs again into the 786. For anyone new, we are looking at the 1 minute chart. My footprint charts, there's lots of places to do it. Mine are on exo charts that I was just showing, but there's a website called, I believe it's gocharting.com, that has all these tools for free. So that could be more appealing. And it's the same thing. Yeah, maybe you shouldn't. Someone's asking what's a single print. I maybe shouldn't have even. So let's just see if we get a reaction here. So we'd be looking for this rejection, for this low to be, or this high to be closed back below. Or not closed back below, but move back below. We can look at. So I maybe shouldn't have brought up those market profiles just because it's not particularly. It's kind of more advanced stuff. There's market sessions, there's candles, each candle prints a row, A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, L, I think it's L or O. But anyways, single prints are where only one candle prints in that area. Price action, there's a whole theory about it, but I can't go into it now. It's much deeper content. All right, let's go to BTC USD. Let's look at open interest here. So we're not seeing yet a significant amount of these shorts getting squeezed out. We're seeing some of them, so that makes sense, right? Open interest decreasing a bit, CVD going up. Some people have their stops above this high. Some people have their stops higher. So is price likely to go a little bit higher and start squeezing out the rest of these shorts? We'll see, but from a technical perspective, you want to see price come back down above this high as a sign of weakness. I apologize, Shiva. You're asking some questions about the market profiles and single prints. I'm not going to go into it right now. I do have educational content on it in the LATF, but it's just to explain it. I had to be really thoughtful about making that video because it's not particularly an easy. It's not an easy way of presenting the data to explain. Footprint charts are very unique, so yeah, I'm not going to dive into it right now. It's okay. It's okay that you ask the questions. It's not actually a super simple thing to explain, and unless I basically dedicate half an hour to it, a lot of people are going to be confused. We can remove this descending channel idea because we aren't getting, like back here, it made more sense if we had the intersection between the golden pocket and the descending channel. Now we don't. And, for this long idea made sense because we had the quick reaction, the swing failure. Here, a short idea doesn't make sense. And you could even potentially say, I'm going to hold this long scalp until there's some weakness. And the short idea doesn't make sense because we aren't rejecting. we're still grinding up above this high. So seeking out liquidity. And then for a deeper perspective on that, we can look at order flow and we can see that those shorts aren't being squeezed out yet. Some of them are, but not many. But, you know, we are having some positive delta. And these candles of about 2 million. Some shorts closing, some longs opening. George says, thanks for the tip on alts, especially reacting at least in some way to golden pockets retracements on low time frames. Crazy powerful. Yeah. I mean, for anyone who, you know, there's some nuanced ways to use fib retracements, especially on low time frames. But for anyone who does not think that fibs are useful, they're such a powerful tool for how easy they are to use. They're so powerful. You just need to know how to pull them properly, but that's not particularly difficult. And so, yeah, my perspective on just price action is I don't know what's going to happen, but I'm rarely confused by what does happen. Typically, whatever happens makes sense. And if you really want to be aggressive about positioning yourself into the market and making lots of decisions, you can do that. You can scalp low time frame price action, but you know, that's something that you have to learn how to do. I'm just popping over to order flow. Open interest increasing, CVD increasing. So some shorts closing, some longs opening. Positive delta between shorts and longs is 1.7 million and a 3 million candle. So like there's more longs opening here than shorts closing. We just crossed over into the daily close. This is a really important time for pivot highs and lows to come in. So, you know, hey, does it make sense to be looking at potential entries in this next 15 to 30 minutes if there's good setups? Because the New York Open and daily close are probably the two most important times to look for potential pivots to come in. Typically, this has kind of changed. But typically, if whatever direction the new daily candle, we're on the 1 minute time frame, but the new daily candle just opened. So this 1 minute candle is the first minute of the new daily candle. Whatever direction it starts opening, typically gets reversed at some point to some extent. It's very uncommon to leave essentially no wick on a daily candle and just have it reverse completely. But the only thing is that's kind of changed. Like I want to say out of like 260-ish daily candles, maybe more, there was like 8 times that it had happened. So it was very unlikely. So you could almost say with like a 99.5% certainty that whatever direction, up or down, the initial move of a new daily candle would be reversed to some extent, at least to leave a wick. But I will note that it changed where we got like 15 of them in like a 35-day period or something. So, you know, take that with a grain of salt. But still, statistically, it's more likely that this initial move gets reversed to leave some kind of wick on the daily candle. What I'm talking about is, I mean, there's a slight wick, but if you actually go to like the daily time frame, it's almost invisible. And you can look and just see it's relatively rare for a daily candle to leave no wick. And people trade those daily opens and daily closes, but at the very least, you'd be looking for some sort of push up to create a wick on this candle before it closes. Somebody asks, you're asking, is there a place you can look to check the time of the trading sessions, all the different trading sessions? That the indicators on TradingView are weird. You can just Google it. So right now, just from a technical perspective, we are seeing a break and a back test of this level on a 1 minute time frame. But all I'm pointing out is just that technical ideas and liquidity ideas can play out even on these low time frames. This scalp long idea, which again, I said I wasn't recommending anybody take it. I'm just pointing it out as a setup. My 100% absolute belief is that if you aren't familiar with an idea, concept, that you shouldn't be trading it just because somebody's saying, oh, you get long here. If you don't understand an idea, it's very hard to execute those trades and to accept invalidation and losses and target. Take some time to paper trade them, understand these concepts. But just pointing out a nice liquidity grab idea here. We'll see pushing higher into the daily open. We'll see what happens here. And I'll probably end this stream hopefully resolving with, you know, either us breaking out or rejecting here. But just sort of navigate this move on a low time frame. And of course you can look at these levels on a higher time frame. But if we go to the 4-hour chart, it's really hard to actually see what's going on here in price action. The reason I'm on a low time frame is we can start to break down what's happening here at this key level. This long be up 1%. And no reason really to close it at any point because there's been no weakness. Gotta refresh these order flow templates. Somebody's asking, I'll answer a couple questions. Somebody says, what would it mean if price breaks 20,000 now? What could we read off it? Nothing. On that alone, I mean, if the only information I had, somebody said, hey, price just broke 20,000. What does that mean? That's not enough information to conclude anything. It's kind of irrelevant from my perspective. Somebody else is asking, on the weekly time frame, there is a death cross between the EMA 200 and 50 EMA. I think the bottom isn't in. What would you say? I have no idea. And I'm not dismissing like your question as dumb. I'll just say like a lot of people want to try to, the constant question is the bottom in? You know, is this a fake out? Is the top in? To think about price action that way, there's no sense. We might get a swing failure, in my opinion. Just look level to level. Trying to guess whether or not the bottom is in is sort of it's not a meaningful pursuit, I don't think. All right, so we can see if we get a swing failure here or a continuation. So swing failure would be as if price rejects into the daily open. So just frankly, beyond the fact that we're not at really a key level in my view, but just off local price action for like say scalp shorts, if I'm thinking about this being a range, I'd be interested in looking for shorts if we have weakness here from a scalping perspective. There are no, but personally I like to wait for major levels. But we can just look at, we don't know what's going to happen. We don't know if there's going to be a continuation or a breakout. We can just start watching for signs of weakness. And maybe we come back down and we tap this liquidity before continuation. Maybe this is a scalp long. And the thing about analyzing low time frame price action is you're not trying to guess, if this is the top, if this is the bottom. You're just looking at a range and you're saying, okay, well, there's some setups in this range on the 1 minute chart. I can take profits. If you take this scalp long, you can start to say, well, I'm going to take some profits off the scalp long if we get accepted back into this range. Maybe I'm going to look for some scalp shorts. Again, not financial advice. I'm just telling you how I would analyze this range. If somebody asks how you'd find positions in a trending market, and I said I would just analyze it as a range. There was a long setup, no need to close it. But now, would I start looking at taking profits from this long? I would be considering it. Let's just draw this as from my scalp long, not my swing long, because this is 2 different time frames. So let's just watch how price interacts with this swing failure. If you're new to the stream, as price rejected here, I talked about this long idea off the sweep of this low, targeting up into these highs, but watching the order flow if we're squeezing out the shorts that open down here. And we hadn't yet. Now they're almost all squeezed out. Just looking for signs of bearish absorption here as well. No bearish absorption particularly. But there is nice volume opening here. We're certainly seeing a reaction. We're not seeing a clean breakout anyways. Nothing like this, right? So here, in the scenario where you have a long here, I would open a short. I'd open a short with my invalidation here, and I would take profits off my long if we start breaking down more. And the reason I take a short and not necessarily take profits yet off my longs is now my scalps are hedged, right? I have a long scalp. I have a short scalp. We don't have a break in market structure, but I'm not waiting for a break in market structure to short. I'm waiting for the swing failure. I'm waiting for the trigger, the reaction. But if we continue on, I have longs covering my shorts at this sort of crossroads level for a breakout. And the ideal will be to be in a situation where you have, and I talked about this earlier, you have longs from support, shorts from resistance, and price can carry one way or the other. And I know I'm making this, I don't know if I'm making this sound too easy. When people ask, how do you find positions? This is literally how you do it. You have to work with what you have. If all you have is low time frame consolidation and price action, well, you have to understand these liquidity ideas, find your longs. I think, I mentioned that you could literally trade this as a swing failure with this stop loss. And certainly made sense just to carry this long, but at a minimum, something like this, or at a maximum, something like this for a stop loss. And I hope that makes sense. The reason to, if you're hedging a position, instead of closing your long because there's no break of this bullish move versus hedging at a reaction of a range. Let me just let the long carry on. Wonder if we're going to take this high. Some nice volume coming in here. 32 million. Still driving towards the liquidity above this high. I would say this though, if I did, you know, if you have this long idea, it makes sense to start taking the risk out of this position and bringing your stop up to here. Because this is either going to fake out or break out, right? But you may as well capture some of that profit. Which offsets your loss from the short. And if you carry on, you're just laughing. Yeah, so someone says, while you're hedging, you're using the same position size, was the question. Absolutely. Because you're just hedging an open position. But hedging is a powerful tool because, and I'm just going to use this range as a example, because it's finding this long is great. You're in the position, but to have closed your long completely here, then it can start getting, and say open to short. So you close your long and open to short. Now you're in a really awkward position where you just got stopped out of your short, and it's like, well, should I reopen my long up here? This is a 1 minute chart, so it gets really hard to find an entry that makes sense with invalidation that makes sense. It's much easier just to let the hedge get stopped out and carry on the long, and then move your your stop up into profits at the minimum. And this is a low time frame example of the idea I was sharing at the start of the stream, which is based off of the same concepts where you're looking for longs that support, prices breaking up, and you're looking for hedges, but you're not necessarily wanting to close your longs, right? You might short with invalidation, but if you break out, you just cut your short and let your longs continue on, because there's no reason to close your longs here. Price is just going straight up. But there might be some reasons to hedge a position on a reaction. You give up a little bit of that profit. So let me, for everyone that's new in the live stream, I'm not sure how many of you there are that are new, but let me, I would recommend going back and watching this whole live stream. I think there was a lot of useful information. But let me just recap that my major target here for shorts is to sweep these highs into the golden pocket, looking for a reaction. I'm going to have to put this in a more presentable format. But if we break out of that level, there's a lot of confluence up here around 23,100, sweeping this high from an Elliott wave perspective. There's the 786, the 1618. So these are my two targets, which, to make it very simple, it's just a sweep of these highs with a lot of technical confluence at both levels. Sweeping the liquidity above this high, sweeping the liquidity above this high. These are fake out breakout levels. And then the third level is a sweep of this high, but understanding that we have a draw to those levels being, we have major levels above there. So, you know, we have technical levels right above liquidity areas. Very nice. And ideally, you want to see a price sweep and reject from those levels. She was saying Asian session has been continuing the trend the last few days. Yeah, well, pretty much every session has. I mean, we've had no pullbacks, and that can be really frustrating for people without long positions, because you know, that's where FOMO starts generating, is you're looking for a long position, but there's no significant pullbacks. The best thing you get is something like that scalp idea I shared, where you're literally having to come down to the 1 minute chart or the 5 minute chart to find these ideas for longs, which you can do. I mean, yeah, they're scalping low time frame price action. Like typically, and one of the reasons that I'm pretty good at reading low time frame price action is because typically, even at high time frame levels, I'm taking my entries off of low time frame price action. So I have the high time frame confluence, but I'm analyzing price on a low time frame to try to sort of idealize my entry. And to see if there's a how price action is reacting, progressing, developing, looking at order flow. So after you're doing that for long enough, you can get pretty good at analyzing the low time frame moves. But anyways, you know, maybe what I'll do, ETH had a nice swing failure here. We had very similar setups on ETH. I'll just cover this really quick. There's going to be a bit of a like post hoc analysis, but we had a swing failure idea here on the low time frame. Same thing, longing the swing failure, and shorting this would make sense. It's not about predicting what's going to happen. It's about it's literally about trading the price structure that you have available with reactions, with risk management, not trying to guess what's going to happen. I'm saying it makes sense from this low time frame perspective, although we are at the high time golden pocket, so that it could make sense there. But just looking at this as a range, that's all I'm saying, is you have the clear idea of sweeping these lows for a long, sweeping these highs for a short, not getting too caught up in a bias, just using risk management. Crane saying ETH CVD also showed bullish divergences. Hey, so I'll say this. I appreciate everybody. I'm going to do some updates here in the Discord, and maybe I'll do some in the public Telegram as well. But I've kind of gone over the levels I'm interested in. Certainly interested here on ETH as we're in the golden pocket. But let's see. Let's see if we get a continuation. Let's look at order flow. And I do recommend, even though I covered a lot of scalping concepts in this live stream, I do recommend, if you're a new trader, not to focus on scalping. Just focus on high time frame levels. There's a little bit more cushion for your decision and execution process. And yeah. But this is a technical swing failure on a low time frame on ETH. We have the swing failure, we have the retest. All right, thanks for tuning in, everybody. We'll try to do another one of these definitely in the next